Brad McMillan, let's look ahead to 2016. Will the economy be better or worse in the coming year?
It will be better. It'll be better than a lot of people expect, and let me tell you why. First of all, the consumer income growth is accelerating. Second of all, we're getting close to the point where consumers are saving enough that they can accelerate their spending and still feel good. Third of all, the headwinds that have really held us back in 2015 are going to be subsiding. Overall, we're going to do better than people think.
But will the stock market follow suit? We've had essentially a flat year in 2015. I think the S&P is up 1% as we speak. So we'll be much higher in 2016, much lower. Where are we going to be?
I don't know about much higher, but we will be higher. A couple of things going on. First of all, that consumer income, that spending is going to translate into top line growth, which we haven't seen. Second of all, companies are going to get through the headwinds. The energy sector has been an enormous subtractor this year. They're going to start to normalize. Same thing with the strong dollar. Not that it's going to go away, but it's going to be better than it was. We're not going to see a continued appreciation.
So you want to fight the Fed because after today's jobs report for November, which beat street estimates, it seems though the Fed is going to move in December, and the old Wall Street maxim is don't fight the Fed. You think we should?
I think we should, because in the early stage of the Fed raising cycle, and I think we are going to get one in December, that's actually good for the market, because in the early stages it means the economy is growing. It's only in the later stages of the Fed raising rates that it becomes problematic. We're still in the sweet spot.
And you also mentioned that lower oil prices has hurt a number of parts of the economy, especially in places like Texas and North Dakota. But what about the benefit to the consumer? Which is going to win out in 2016? The harm to places like Texas or the benefits of the consumer who can spend more at the mall?
The benefits are going to win out because a lot of the damage has already been done. There's been enormous cutbacks in employment and capital investment in the energy sector. Much of those cutbacks, almost all of it, I suspect, have happened. So that damage is now in the past, and the benefits will continue. In fact, if you look at spending, I would argue one of the big reasons we have such strong auto sales are people are spending that money on cars.
And you also mentioned the stronger dollar. Won't this weigh on American multinationals?
Again, it already has. We've seen that damage. The question is it going to get worse or better? I would argue what we've seen in the past is when the Fed starts to raise rates, the dollar actually softens a little. So it could be better. It's unlikely to be that much worse because a lot of this has already happened. It's in the market.
All right, so which sectors do you like heading into 2016?
I like financials. The economy is revving up. There's going to be more need for financing. Banks are going to be able to make more good loans. And because the rate cycle is shifting, they're going to make more money on each one. Also, consumer discretionary. Nobody's ever lost money betting against the American consumer. You haven't heard that much recently, but that's going to start coming back.
And then finally, if you're going to avoid a particular sector, which one would it be?
If I was going to avoid a particular sector, it would probably be utilities. They're interest rate sensitive, and the world is changing in terms of how they generate their power. There's a layer of uncertainty there that we haven't had before.
All right, well, thanks a lot, Brad.
Thank you, Greg.
Thank you for watching The Street.